Bitcoin in danger of losing $30,000 with Grayscale's big GBTC unlocking in 2 weeks? Whether a potential sell-off of shares tied to a multi-billion-dollar Bitcoin, BTC, investment fund could crash the cryptocurrency's spot prices has turned into a hotly debated topic among the analysts in the space. Grayscale's premium remains negative for months. The argument concerns Grayscale Bitcoin Trust, the world's largest digital assets manager that allows institutional investors to gain indirect exposure in the Bitcoin market through its product, GBTC. Investors purchase GBTC shares directly via Grayscale and daily private placements by paying in either Bitcoin or the US dollar. Nevertheless, investors can sell their GBTC shares only after a 6-month lockup period in secondary markets to other parties, their 5-asset NAV. On the other hand, liquidating GBTC share market price below the NAV brings losses. So if investors decide to dump their GBTC holdings, they would have to do so for a financial casualty. That is because the share has been trading at a discount, i.e., under its NAV, since February 24, 2021. GBTC premium has been negative for months. Source, by, BT.com. Some analysts, including strategists at JP Morgan, believe that accredited investors will sell at least a portion of their GBTC holdings after the July unlocking period, thus weighing further on the outgoing Bitcoin market downtrend. Despite this week's correction, we are reluctant to abandon our negative outlook for Bitcoin and crypto markets more generally. So despite some improvement, our signals remain overall bearish, said Nikolaos Panagurtsoglou, the lead strategist at JP Morgan, in a note to clients. Is Bitcoin price correlated to Grayscale unlock dates? These are the same shares that investors bought at around 40% premium in December 2020, explained Panagurtsoglou. The month saw Grayscale Bitcoin Trust attractive inflows of $2 billion, followed by $1.7 billion in January. That means about 140,000 Bitcoin worth of shares will get unlocked by the end of July. About 139,000 Bitcoin have already been released between mid-April to mid-June, a period that also coincided with spot BTC/USD's crash from around $65,000 to as low as $28,800. Lynn Alden, the founder of Lynn Alden Investment Strategy, noted the correlation between the spot Bitcoin price crash and its Grayscale's GBTC unlocking periods, noting that the same could happen as more shares get unlocked in July. Grayscale Bitcoin Trust unlock dates. Source, Byte.com. Alden hinted that the correlation pointed to a deceleration of Grayscale's neutral arbitrage trade. In arbitrage trade, institutional investors, like hedge funds, borrow Bitcoin to purchase GBTC shares. Then, after the lockup expires, these investors sell GBTC shares to secondary markets to retail investors, typically for a premium. Then, they return the borrowed Bitcoin to their lenders and pocket the difference. Part of the run-up in the second half of 2020 was due to the Grayscale neutral arbitrage trade, until late Monday, adding, ETFs and other new ways to access Bitcoin made GBTC less unique. The premium went away, so the neutral arb trade went away. Grayscale Investments stopped selling GBTC shares after February 2021. Source, by, BT.com. But, according to David Leifchitz of Exo Alpha, arbitrage strategy might have contributed to but did not cause the Bitcoin price plunge. The chief investment officer noted that the real GBTC arbitrage trade strategy is for investors with deep pockets. That is because they would require to hold the short Bitcoin position during the GBTC lockup period. The overtime costs would risk offsetting the price differential that was arbitrage away. And for the simple buyers of GBTC shares at a discount versus BTC who didn't sell short BTC against, their profit depends on the price at which they bought GBTC. If they bought between $40,000 and $60,000, they are in the red today, and may not want to sell just yet and lock in their loss, he told Cointelegraph. Michael Sonnenschein, the chief executive of Grayscale, told Barron's that investors buy the GBTC shares with a medium to long-term outlook, so they might not want to dump their holdings immediately upon its unlocking. I would generally say that investors certainly are going to think about where the price of the shares is, relative to net asset value or relative to Bitcoin before they would think about getting any liquidity, Sonnenschein asserted. The views and opinions expressed here are solely those of the author and do not necessarily reflect the views of Cointelegraph.com. Every investment and trading move involves risk. You should conduct your own research when making a decision.